Hello, distinguished guests. Welcome to Toronto Centre's International Panel on Advancing Cybersecurity and Financial Inclusion, which we have organized in partnership with our generous hosts, the Center for Financial Inclusion. I am Babak Abbaszadeh, CEO of Toronto Centre, and I commend the Center, the other Center, Financial Inclusion Center, for organizing this week. By the way, for those of you who follow Toronto Centre, we will soon be celebrating our 25th anniversary. Silver anniversary. It is our quarter century. We have trained more than 20,000 central bankers and other financial supervisors from 190 jurisdictions to become change agents for building more stable and inclusive financial systems. New digital transformations are triggering profound changes in the financial sector and the economy, and can play a vital role in enhancing financial stability, consumer protection, and financial inclusion, as well as better promoting the promise of the SDGs. That's why digital transformation is an important G20 goal. However, the promise that digitization holds for financial inclusion and the empowerment of women in developing countries to help eradicate distances and the lack of access for more than 1 billion unbanked women will not fulfill itself. Financial supervisors and regulators play a big role. They must work collaboratively with other stakeholders within the international development ecosystem to design risk-based oversight that not only mitigates risks of cyber and financial crimes, but also facilitates innovation to increase financial access to even more people. Today, we are blessed to have very distinguished speakers who will share their knowledge in this complex issue. They are Seema Kamil, Deputy Governor, State Bank of Pakistan; Anita Bhatia, Assistant Secretary General of the United Nations and Deputy Executive Director of UN Women, if I may dare say, a good friend of Toronto Centre; and Ratna Sahai, Senior Director on Gender in the Office of the Managing Director of the IMF. We're also fortunate that our wonderful Toronto Centre board member, Aurora Ferrari, advisor to the Equitable Growth, Finance and Institutions VP of the World Bank Group, is moderating this important conversation. You have already seen their bios, and neither me nor Aurora will read them so that you have sufficient time for the conversations. Toronto Centre's mission is generously supported by our key institutional funders, Global Affairs Canada, the Swedish International Development Cooperation Agency, and the IMF, as well as other valued international partners. Now, it's my pleasure to hand over the session to Aurora. Enjoy the program. Aurora, please.
Thank you very much, Babak. Welcome everybody who joins us this morning. You have already heard about our distinguished panelists, so let us start without further ado with the first question. I would like to start by addressing Seema Kamil, the Deputy Governor of the State Bank of Pakistan, by asking her to give us a sense of the key tenets of the State Bank of Pakistan work that is being done to increase women financial inclusion, which is of big concern to policymakers in Pakistan. So first here, what is being done and what are the challenges that you have been facing along the way? Thank you.
Thank you, Aurora, and thank you for this opportunity to talk about something that's very close to our hearts in Pakistan and at the central bank. So talking, why is it such a priority? And that's because we've got a very worrying gender gap. And the gender gap, even in the region, is worrying. And if I can give you just some numbers, for example, if you look at our financial institution, even in their own sphere, there's only 12% women who work in the banks. That's even less than the women's labor force participation, that's 25%, right? Women's account ownership is just 24 million compared to 50 million men. And this gap is actually growing. If you look at SME financing, women are just a meager 9%. And so, we've been looking at this for some time and talking about it for a long time, but it was not working. So we decided to use our own regulatory mandate to move our regulated entities from a gender neutral approach to a gender intentional approach. And we spent a long time doing this, and this is what we call our banking on equality policy. And it's got basically 5 pillars. I won't, in the interest of time, go through all of them, but what it actually does is tries to build or give targets on the number of women working within financial institutions. It talks about a gender lens on all products and services, women champions at all touch points, as well as the very important aspect of data. And this was a long process, and it's very, very important for us. And we've been pushing it, and now it's launched, and I'm very happy to say already showing results. But I'll talk about 3 principal challenges that we faced. Just the first was a mindset challenge. And this is not anything to do with the conservative society or faith-based. It was a mindset that existed within the financial institutions, and frankly, even within the state bank itself, because we're part of that ecosystem. And so women as customers, or women in branchless banking, or women as employees were not considered valuable, and in some ways, not even respected, if I can put it. And I've been in the financial sector for a very long time. And so it was CSR, and you talked about it, and it was all very nice, but it was not accepted as a viable, profitable proposition or the largest untapped market. So we went through a 2-year process of consultation. We took in people from academia, from the financial sector, from businesses, from lawyers, from also entities like the IFC, World Bank, but also locally, the government. And we did 2 years of consultation, many sessions, took feedback. And what it also did was then developed a buy-in and also conveyed our seriousness. And so that was very, very important part of overcoming the mindset. I'm not saying that we've succeeded, but that's went a long way. And now other entities like our Securities and Exchange Commission and so on are actually following with policies of their own. So that the first challenge is mindset. The second was actually women's access. Women as a whole, and particularly in Pakistan, are not so mobile. They cannot actually go to branches. And so we had to develop products for them. And there were 2 principal ones that are available to men as well, but are of particular interest to women. The first one, which I think is very important, is what we call Asan Mobile Account, which means a simple mobile, which is used by simple feature phones, USSD based, because we're still in a very rural, low income environment. And all they have to do is to dial a certain code, and they can open a branchless banking account. And this has been very successful. We've got 5.7 million accounts of this nature, with 42% opened by women. So I think that's something that is working and will continue to work. We still have to develop more use cases, but it's a big step. The other one is the Asan digital account, which is for smartphones. So it's a slightly more higher level account with more KYC, but then that is fully digital onboarding, including all factors. And again, women are a major part of this. We still have a way to go because we only have 400,000. So our ambition is big, but that was the second challenge. And the third, very important, is the lack of data. Because banks were gender neutral, and so were we, they couldn't really tell us how many women's accounts they had, or let alone whether a woman was a decision maker. So we've now put in processes as part of this policy to actually get the data. And I'm happy to say that now, given starting from March of this year, it was a long process, both internally, the banks cleaning up their data. We took into, assistance from various international agencies. We tried to strike a balance, because if you lumber banks with too much requirements, then the whole proportionality is lost. So but then we got all that data in, and now we are able to actually use that data in a meaningful manner. And given all that, I think the good news of this policy is that we had set a target for 2023 for 20 million women, but we've already achieved that. So that's what banking on equality is all about. So we have a long way, but we're doing it.
Thank you so much. Thank you so much for sharing this very rich experiences. And you know, as you said, measurement is a key part of that to also assess progress as you move forward. I would like to now turn to Ratna Fahai from the IMF. She has been at the forefront in the IMF of the gender work, and the IMF very recently published a gender mainstreaming strategy. And I think it would be very interesting to hear from you, what are the key pillars? And also, if I may say, what would be the comparative advantage of the IMF as compared to, you know, other agencies which may have already adopted gender strategy? Thank you.
Thank you very much, Aurora. Really a pleasure to be here, and I really get excited, you know, hearing Seema talk about the progress they are making. This is what we dream about at the IMF, and I hope there'll be more countries who are adopting this at the central bank. Many central banks ask, what can we do? You know, our job is monetary policy. So that is something, there are some barriers there that do need to be broken. But let me now turn to actually what we have done at the IMF. Realizing, especially after the COVID-19 breakout and the pandemic, and realizing how much more women have been impacted as compared to men, we at the fund, under the leadership of our managing director, decided it was high time that we mainstreamed gender in our core activities. So our vision actually is quite ambitious. For those who don't know, the IMF performs 3 main activities to support our 190 member countries. And the goal then is we have 3 activities: macroeconomic and macro financial surveillance of the world and individual countries, which includes policy advice, of course. We also lend to member countries when they request financial help. And third, we help members develop capacity in our areas of expertise to support both surveillance and lending activities. And we work closely with Toronto Centre on this. So our vision then is to embed gender, or to apply a gender lens in all our main activities. But then what is our strategy? So our strategy has 4 main pillars. First, we need to strengthen our analytical tools to empower our country teams to conduct rigorous analysis. As we know, no policy can be well designed without a good understanding of the problems and how policies affect outcomes. A big part of this is data, as Seema had just mentioned. We found, when we put together the relevant data, relevant macro data that we care about, this covers broadly about 5-6 areas, which include education, health, labor force participation, legal barriers, financial access, leadership of women. We found that across 190 countries, let's say in the last 20-30 years, 30% of data are missing. So this is the first step that we would appeal to policymakers, central bankers, regulators, ministries of finance, not just ministries of women and children, to push for, to collect gender disaggregated data. Second, we also need an internal governance framework, which is within the IMF. That is a system and processes and a supportive structure to ensure that we make steady progress in our goals, that we remain within our mandate at the same time, and we establish a systematic criteria to engage with member countries. So for example, we should prioritize those countries, given our limited resources, that have the largest gender gaps and that have the most impact on the macroeconomy, for example, in raising economic growth. And we are currently already in the implementation phase of designing that criteria. So the idea would be we would cover few countries every year, and over time, we will cover a much larger set of countries. And that is because we have many mandates and we have limited resources. Third, and this is really important, a message that came to us from the board, reinforced, that we should strengthen our collaboration with external partners, such as the World Bank and UN Women, and I'm so glad to see Anita is here, to benefit from knowledge sharing and peer learning, and also the experience of many partners who are on the ground and we are not. And so that collectively we can make a much larger impact. And finally, the fourth one, because our resources dedicated to gender are limited, we need to use them well. So we are centralizing part of our resources. We've created a work unit, a central unit, to benefit from scale economies and analytical work, but also to serve as a focal point for external partners. So what is the contribution of the IMF that you asked, Aurora? In the context of preparing our strategy, we have defined the IMF's role very clearly. And that is to fill a gap that exists at a global level that is in our area of expertise. Namely, to focus on the impact of macroeconomic and financial shocks and policies on gender disparities, and how we can help countries design good policies to reduce these gaps while fostering economic growth and resilience for all. The fund is also very well placed to raise the profile of gender disparities with its direct counterparts in countries. We have the convening power to engage with ministers of finance, central bank governors, who are very influential as they make and implement national macroeconomic and financial policies. I'm pleased to report that during our recent annual meetings, there was a lot of interest from ministers and governors, deputy governors, as well as other partners and stakeholders to discuss the strategy and how we can work together. So let me stop there. Thank you.
Thank you very much, Ratna, for this very comprehensive answer. I would now like to turn to Anita, talking about data and measurement. At the UN, you published the progress of the Sustainable Development Goal, the gender snapshot. I believe you just, publication is annual. I believe you recently published it. And as per your snapshot, the latest evidence on gender equality shows that we would like to know what it shows and yeah, what has been the progress with respect to gender equality. Thank you.
Thank you, Aurora. And let me just start by saying good morning, good afternoon, good evening to everybody who's joining us, but also a huge thank you to the Toronto Centre and my friend Babak for inviting me to this session. It's really a delight to be with you, Aurora, with Ratna, and so nice to meet you, Seema. Look, I think the question you asked is really important because, this report that we publish every year on the progress on gender equality looks not just at SDG 5, which is, of course, the gender equality SDG, but actually at how gender is being implemented in all SDGs. And I have to say that the results of the newest version of this document are depressing, to say the least, because the pathway to gender equality by 2030 looks very, very rocky. And, as Ratna said, and as we at UN Women have been documenting since the beginning of the pandemic, the impact of the pandemic, which is long-term, has been much more negative for women than it has been for other segments of the population. And so when we look at the 9 SDG 5 targets, 3 out of these are completely off track in at least one indicator of progress. So if you look at, for example, target 5.4 on shared responsibility for unpaid care and domestic work, that's off target. The targets on universal access to sexual and reproductive health, which is a foundational right for women, are off target. Policies and legislation on gender equality and women's empowerment broadly are off target. And so we calculate that it will take about 286 years. So, just rounding up, let's say 300 years, to remove discriminatory laws and to close prevailing gaps in legal protection for women, 140 years for women to be represented equally in positions of power and leadership in the workplace, and at least 40 years to achieve equal representation in national parliaments. So these are some of the high-level findings of the report. And when you look at some issues that have been around for a really long time and are structural and are caused by some of the issues that Seema was alluding to, mindset, cultural norms, stereotypes. If you look, for example, at the issue of child marriage, we calculate that progress has to be 17 times faster than the progress of the last decade, with girls from rural households and poor parts of the country affected the most. So, if you look at the current rate of policy implementation and change, it's pretty clear that this kind of rapid accelerated progress is going to be pretty hard to achieve. And so I think, we will have to make extraordinary efforts to push policymakers, both in the financial sector, but also outside, to focus on these issues, which is very difficult today, given the mind space that policymakers have and how much of that mind space is taken up with really what are perceived as macro-critical issues and are macro-critical issues. And gender equality and women's empowerment issues are still not viewed as macro-critical. So it's not up there as a priority for most of the policymakers that, who do need to focus on this. And when you look at this, the data from the report, sort of geographically, if you look at sub-Saharan Africa, for instance, out of 18 indicators for SDG 5, not one is close to target, not one. And, when you look at Central and Southern Asia, for instance, out of the 17 indicators for SDG 5, only one indicator has been met or almost met the target. So, not to belabor the point, but I think the overall message from this report, which is published by UN Women and UN DESA jointly, is that the world is basically seriously off target when it comes to SDG 5. Now, the last point I'd like to make about this is that, as both Seema and Ratna have said, data is absolutely key. And the limited data that we have to actually monitor SDG 5 targets makes it quite difficult to keep creating the burning platform for change, because you do need that evidence base to show what is happening, to show trends in time, and to show improvements, so that through cases of positive dissonance, you can show policymakers what is possible and how it is possible to reach some success. And so our estimates show that only 47% of the data that you actually need to monitor SDG 5 is available, with, of course, huge variations across countries. And so I think one big conclusion also of the report, and very important conclusion of the report, is that without greater investments in data collection, in a focus on sex disaggregated data, and in making this a real priority for national statistical institutes, as well as others in the ecosystem of a government who are collecting data, it is going to be really difficult for us to be able to consistently say where there is progress. And this is going to be a decades-long effort. This is not something that we're going to be able to fix in 5 years. So we do need to bring, excuse me, a sense of urgency to this issue of increasing investments in collection and analysis of data. I'll stop there.
Thank you very much, Anita. Thank you very much for presenting this very detailed but unfortunately sombering picture. I would like to turn the next question to Ratna from the IMF, who has worked for many, many years on financial inclusion. So obviously advice and policy recommendation differ at the country level. However, based on their extensive experience, literally across the globe, we would like to hear from you. What are the common threads that you have identified in your work on financial inclusion in terms of findings, as well as policy recommendation? Thank you.
Thank you, Aurora. Before I turn to this question, I want to address one very important point that Anita just raised. And this is related to the mindset of influential policymakers that, of course, for good reasons, are focused on the many crises that authorities are facing across the world right now, which apart from the pandemic, it's also the fallout from the war in Ukraine, the high inflation, the threat of recession, the high food and fuel prices, food security for that matter. So a really important message of our gender strategy, it's absolutely core in our vision and our strategy, is that addressing women's barriers, removing them, is absolutely macro-critical. It is macro-critical. Why is it macro-critical? It is macro-critical because we have many evidence based on papers produced at the IMF, and I'll talk about my own work on financial inclusion, and outside, which show that reducing gender disparities actually leads to higher economic growth, lower inequality, higher economic and financial resilience. And this is why the IMF can get into this business, because it has macro implications. So this is a key message, a starting point that should be there for all policymakers. Women are part of the solution to the current problem. And there are many low-hanging fruits too. But let me now turn to the question you asked, Aurora. So yes, I've been working on financial inclusion for the last 7 years, leading the work at the IMF. We incorporated gender well before the strategy was launched. And my own research with my co-authors relates to three topics which are interrelated: financial inclusion, gender, and fintech. So let me just highlight a few key findings from those research papers. There are 5 or 6 of them. The first one is higher access to financial services to the underserved, whether men or women, increases economic growth. Okay. But second, the benefits are even higher when it includes women. And this is especially true in reducing income inequality. Third, in many regions, fintech is narrowing gender gaps, but there are many, many other regions where there are huge barriers, and there is the digital gap between men and women is actually rising. And we really need to watch that, because technology and digitalization is advancing very, very fast. Fourth, finding from our own study, again macro-critical, greater gender diversity in the executive board of traditional financial firms, banks, for example, and the emerging fintech firms is associated with better financial performance, like lower non-performing loans, like higher capital buffers, like greater revenues. So these are very compelling findings, which indicate that financial inclusion of women is macro-critical. Now, that relates both to women as users of finance, but also women as leaders in finance, like Seema. Now, with regard to the policies, there are many actions that policymakers can take. First, and I can't be overemphasized, central banks can collect gender disaggregated financial data. Very, very important. They should also conduct research within their own central banks to inform and come up with better policies. There should be an investment, number two, in digital and financial literacy of women. It should be a priority. And in this, it's not just the official sector's responsibility, but they should partner with the official sector, the private sector, and also with non-government organizations. You know, everybody has a role to play, and there's a lot at stake here. Third, you can provide the education, but then you also need to provide equal access to digital infrastructure, mobile phones, high-speed internet, digital ID. Digital ID has been transformational in India in increasing financial inclusion. And I really hope a lot of other countries follow suit. Fourth, very important to promote alternative sources of collateral and new ways of building credit. There's a need to remove gender-based legal barriers that prevent women from obtaining official identification and or collaterals. Fifth, central banks can champion proactive gender policies, not just within central banks and in the financial sector, but in the economy. They can promote gender diversity in leadership positions in the financial industry. We know that the diversity of skills and thinking in leadership positions helps prevent groupthink that could lead to poor assessment of risks and business strategies. Six, central banks, banking supervisors can contribute by helping to monitor and also enforce any corporate governance guidance or rules put in place by corporate governance agencies, which may require disclosure of diversity targets or even progress. Let me just give very quickly 2 examples of what IMF has been involved in. We've conducted 2 regional workshops in cooperation with our regional centers to raise awareness about gender diversity in leadership of financial sector. We have worked with Women's World Banking, who have conducted targeted surveys, discussed results, put forward recommendations, how to raise and promote women to take supervisory positions. And finally, we've also partnered with the Toronto Center in some of our financial sector programs. And a good example is the Democratic Republic of Congo, which included for the first time a work stream on gender inclusion. It was a pilot exercise for embedding gender perspective into IMF's core work of monetary and financial stability. It included, most importantly, collection of sex disaggregated data and our own statistics department's financial access survey. The final recommendations in the report included defining the central bank's internal gender policies, analyzing information on the composition of board and management bodies of financial service providers, incorporating it into supervision process, mainstreaming gender in the upcoming supervision of consumer protection, and finally completing the internal review of data collection and resuming reporting it to our financial access survey. So let me stop there. Thank you very much.
Thank you very much, Ratna, for this very rich insights. We may get back to some of them, and as I already see that there are some questions from participants on this. So let me turn to Anita now. I we would like to hear from you, from your position where you look at countries across the world, in terms of how country balance promoting financial inclusion and minimizing cyber risk, which is a risk that is ever present, that can create havoc in the financial sector. Thank you, Anita.
Thank you for that question, Aurora. And I think, before we get to kind of some of the challenges, I just want to underscore, just as Ratna did, just how important digitization can be for women's financial inclusion, and what we have seen over the last decade in particular of how the digital revolution can really bring immense benefits for and really good outcomes for women. And if you look at actually the World Bank's Findex data, and you look at how the financial access gender gap has been reduced, from about 9%, where it was kind of stuck for almost a decade, to now 6%. I think this is really attributable mainly to mobile money and the uptake of mobile money in most parts of the world. And I do agree with Ratna also that the use of ID systems and the use of biometric IDs has been absolutely fundamental to overcoming some of the issues which had put women behind. And so if you look at, for example, the case of India, the gender gap in financial account ownership has really been reduced. I think in 2011, women had, only about 25% of women had an account compared to about 45% of men. And if you fast forward to 2021, that number has shot up exponentially. And this can all, I think, mainly be explained by the investments in the infrastructure of having digital IDs. But if you look at, what are some of the downside risks of this digitization, particularly for poor women, one obviously is fraud, the loss of funds, the loss of personal data, and, something we don't talk about a lot, but the exposure to online violence is also a risk. Once you are in the cyber world. So I think fraud capitalizes really on a compounded set of issues. One is generally lower levels of digital literacy, period, but digital literacy in particular, lower levels of cyber awareness, and frankly, pretty weak regulatory mechanisms in many places to protect consumers, and very limited, non-existent in many countries actually, cybersecurity prevention and response capabilities of financial service providers. So I think to address these kind of cyber risks at the consumer level, we do need policymakers, financial service providers, and actually grassroots organizations to do a number of different things. One is to invest in capacity building for women's literacy and for women's digital literacy. Second, I think really important to push regulators to adopt cutting edge, best in class regulatory frameworks and regulatory regimes that can support follow up, as well as proper prosecution of those who are convicted of crimes. The framework just doesn't exist in places. And, if I look at our work in Pakistan, where, we have actually a very exemplary partnership with the State Bank of Pakistan, I think what we have done in Pakistan really is a model that we can look at for other countries, because we have rolled out very comprehensive digital skills training for women who are home-based workers, for women who are heads of micro enterprises, so that they know how to access information through e-commerce platforms. We've invested in teaching women how to leverage digital financial services. And, I really appreciated what Seema was saying about the investments in things like Asan Mobile. This is absolutely essential, because, the more complicated you make it, the harder it becomes harder to reduce that barrier to entry. And so investing in teaching women, okay, fine, there's a mobile wallet, but how do you actually use it? And fine, you have cash transfer services, how do you use it? So I think, that part of that infrastructure building, I believe, is reasonably well taken care of. Where there is still a need for work is more on consumer protection, more investments in education, more investments in literacy programs, and so that users understand what are the risks and what are the recourse mechanisms that they have, if any, at their disposal should something go wrong. And of course, we also have to think about cybersecurity risks at the provider level, so that policymakers need to provide a very clear specification of what is expected from financial institutions should there be these lapses in cybersecurity. And there are examples from Nigeria and Ghana where central banks have actually enforced compliance mechanisms, such as minimum requirements for establishing and developing operational resilience in the institution in the case of these attacks. So, these kinds of solutions can help build trust in the providers, but also address that very important intangible of creating confidence and capacity in women so that they can actually feel empowered to use those services, which will be critical for effective financial inclusion. Thanks, Aurora, and back to you.
Thank you very much. Thank you, Anita. I would like to ask the last question of the session from the panel directly to Seema. We opened with a very hopeful message of changes that have been that have taken place in Pakistan. So building on those, and I also see that many participants in the panel are also interested to hear about this. So we would like to, a lot of the barrier to access for women, it was just discussed, are related to security and trust. The fact that consumers, and especially women, may not feel comfortable in using digital services. So how can supervisors such as yourself create trust without creating friction in the user journey? At the end of the day, you also have a responsibility for maintaining financial stability, right? And cybersecurity and fraud can, create instability. So first, how can you create trust without creating friction in the user journey? And second, how have you been dealing with the challenges of digital technology risk, and what lesson can you share? Thank you.
Okay, so thanks, Aurora. This is a very wide topic, so I'll try and bring it out as best I can. When we talk of cybersecurity, I'd like to talk a little bit wider, because our responsibility as a supervisor is not just looking at like huge cyber attacks. And of course, that's greatly part of our responsibility. But we also talked, as Anita did, about digital fraud, identity theft, social engineering, and then even things like in a country like Pakistan, outages, breakdowns. In the floods, for example, a lot of the cell phones for a very long time did not work. We could not contact some of our own offices. So those are the things that, when you're trying to bring in digital financial services and inclusion, then people lose trust and they would much rather have a branch. And then we have a challenge in our country of not just financial inclusion, but way too much cash in the economy, which leads to all sorts of issues, which are more fiscal in nature, but then we don't have a documented economy. And, maybe 35% or in excess of that of our banking deposits is cash in circulation, therefore it's too much cash. So we've tried to balance all of these technological risks and cyber attacks with our desire and our mandate and in the central bank of inclusion and reducing cash. So how do we do it? There's a normal approach to cybersecurity that supervisors take, right? They try to go and then they do inspections, they keep up with best practice, they make sure that assets, customers, data are protected. That is the traditional approach. But I would say is that a sufficient approach? And I don't think it is. And we have been trying in our own way to reduce the friction in the journey that these measures of cybersecurity, and which are very essential, can cause, and discourage inclusion. For example, and I just digress a little bit, our financial institutions, because there's a huge fiscal deficit that is filled by borrowing, they have a very easy, low risk avenues to make money. So the customer journey, especially for the excluded, becomes less important because they're commercial organizations. And they don't take that user experience view. And so when there's cybersecurity, they will go for the best standards, they will go for everything, and then they will start to create frictions. And so what is our role? Yes, we want them to have the best cybersecurity and all of those systems. But for example, I'll show a couple of examples where we've been more collaborative in this without compromising. For example, digital onboarding. Now there is false activation. And so what they did was, okay, you can be onboarded, but you must go to a branch and get yourself biometrically, do the biometric verification. Now for women in particular, and for the more vulnerable aspects and rural, first they have to go find a branch, they have to get there, they have to queue. It makes everything so much more difficult. So then we worked with our NADRA, which is our identity verification service provider, and we got together with them to make a safe biometric on an app. So that was the digital onboarding, because then, especially women or older people, because there are many other disenfranchised persons, right? In the rural communities, they can't get to a branch. And when they get to a branch, they're not treated very well. So they can then do this biometric. Then, of course, we come to the training part that Anita was talking about, because that literacy and the work you've done is very much appreciated. Then we have overseas Pakistanis, and we have about 9 million overseas, many of them what is called low-income workers or construction workers. And they want to have an account at home, but they can't, they couldn't. It became like a nightmare because there's so much paperwork. So we asked banks to create a digital platform, which we call the Russian digital account. And again, the normal approach would have been to let them set it up and then go back on a once a year inspection, for example, and see if the cybersecurity measures and the other security measures, identification measures, etc., were okay, the KYC and so forth. But then what we did was we took a different approach. We brought them all in, we sat them together, and we talked through before launch the gaps in security, and we suggested and they talked, and we tried to, as far as possible, to identify the vulnerabilities and the gaps before deployment rather than post-deployment. Because for a customer, a woman, anybody who's vulnerable, one attempt, and if it doesn't work properly, they give up, right? They throw away the phone, they throw away the digital convenience, because it's such a, if I can put it bluntly, such a pain sometimes. So we did that, and that improved the trust and experience. So I think those were two aspects that I wanted to talk about. And then the last one is digital fraud. And I just like to tell a very short story, because I know we are running out of time. Is that someone who works for me, I forced him, works for me at home, to open an account, and he didn't want to, because he said, I take away everything on day 2, so please don't do this. But I made him do it, and then he did it, and then he started to save. And one day he got a phone call, and they asked him for his card number and his PIN, and they sounded very authoritative, and he gave it, and all the money was gone. And he came to me and he said, I don't want this fixed. I just, you can do it from the state bank, you can call the bank and have it fixed, but just please give me cash. Right? So those are the challenges. And of course, I, convinced him to retain the account. But then what do? We've been trying a lot on awareness, a lot on training, on literacy, but it's still increasing. So I think we need to now, and we're working with some of our institutions to start to use AI and machine learning for this. They should have known, if they used, that his pattern of behavior was once a month he took the money out, and suddenly it was out of pattern. there should be ways of identifying that. So that's the areas that I think we will have to move to beyond training sessions if we're going to really work on digital fraud. So that's from me so far. Thank you, Aurora.
Thank you so much, Seema, for this very, real life example, which are those that policies, have to affect. I would like to take now some questions from the audience. There was a question that followed up on a discussion on a point that Anita made while answering one of the previous questions, which relates to the fact that hesitance of women in becoming financially included is also related to the fact that once you enter the digital world, you may be harassed and there may be violence. And you made reference to the fact that there is much to do in this area. So I wanted to pick up on that question and hear from you if there are any best practices to mitigate this. Thank you.
Yeah, thank you, Aurora. I mean, I think it's actually worth underscoring, just before I get to what the best practices are, how prevalent this can be, and just how easily stereotypes and the worst instincts of people show up in the cyberspace. So, when you look at and I just want to share, that when you look at metaverse, when we have been in discussions with Facebook on this, when you look at Meta and metaverse, and I just offer this as context setting for the answer, it is remarkable from those UN Women colleagues who have tested the metaverse. What they have found is when you go in there and you adopt a virtual avatar, there are immediate violent attacks against the female avatars in the metaverse. So, it is just as if people are waiting for the presence of a woman to show up, to take out all kinds of pent up anger, frustration, and violent tendencies online. So we cannot minimize how much of this is latent and is just seeking paths for expression. And that is actually what happens online, even in something which is seemingly completely unconnected from violence, like digital financial services. So, I would just, as an example of what can be done, I would refer again actually to the excellent partnership that we have in Pakistan, because there we have, as part of this partnership, rolled out a cyber harassment helpline, which operates 24/7, and it is designed to help women who are basically experiencing online harassment, either with counseling services or with very specific ideas and suggestions on how to combat their particular technical issue. But the first step, Aurora, has got to be recognizing that this is an issue, and that, just because you are a regulator, you don't have to think about something as uncomfortable as online violence. So the idea of keeping online spaces safe and free from harassment is a very real issue, and it has to be upfront and part of the package of interventions and part of the policy infrastructure that is built to do digital financial inclusion. And so you also have to, in addition to all of the stuff that we talked about in terms of training for women, in terms of literacy, there also has to be training provided about women's rights not to be harassed, and women's rights to seek help and support in the event of harassment. So this work that we've done in Pakistan, UN Women partnered with something called the Digital Rights Foundation, and that's with whom we set up the cyber harassment helpline, and it provides training, awareness raising on how to keep online spaces safe and free. It provides information on existing laws and policies, what recourse women have. And what we did was we collected data, mainly qualitative. I mean, it's hard to collect a lot of quantitative data when you have something that hasn't been in operation for a very long time. But we put together a policy brief which basically was used as a lobbying tool and as an awareness tool with different agencies in government so that they would start thinking about it. And then we partnered in Pakistan with the Federal Investigation Agency and rolled out cyber harassment training for officials of the Federal Investigation Agency so that they would be sensitized to this issue as well. So that's one example of how it can be done.
Thank you very much, Anita. I would like to ask, if I may, one last question, and I would like to address this question to Ratna. It comes from the audience. When measuring financial inclusion, which, as we have heard throughout the presentation, is so important, how do you account for custom and habit, the so-called ethnographic data, which is so important in ensuring women are included? Thank you.
Thanks, Aurora. Just following up on what I said about where the data are missing, what we are finding, interestingly, and this relates also to the question on using ethnographic data to complement what we have. What we are finding, even though our strategy is to focus our attention initially on those with the highest gender disparities, we are finding that the countries where the gender gaps are among the highest don't have the data. And that's a real problem. It's a real problem because without hard data, it's very hard to make the case it's macro critical. So that it's a problem we are confronting right now. So let me just say, I don't have a specific solution. But going back to your question, of course, case studies, qualitative data, we are very much encouraging our country teams to use for that purpose. And on this question of the cultural, religious, and social norms, we've all faced that. In fact, Seema, Anita, and I all come from that background, so we have first experience. There is really fascinating new studies that show when you look at different factors that contribute positively to reducing gender disparities, like social, social norms, which are barriers actually, policies, the characteristics of the country in different ways. The studies are showing that actually policies matter more than social and cultural and religious norms. And it's something that Seema hinted at when she talked about her experience in Pakistan. So the contribution of policymakers is absolutely huge. There is a lot they can do when there's very strong signal from the top. And to be honest, I've seen it in my own country from the Prime Minister, who's completely focused on gender equality, seeing it in Saudi Arabia, countries which have, where the social norms are very, very rigid. And these are low-hanging fruits. Once the top leadership makes the case, and of course, very important to follow through, things can change very rapidly, including laws, by the way. So I'm very hopeful. If we can convince the policymakers, we can do a lot together. Thank you.
Thank you so much, Ratna, for this very, hopeful, but yet based on data and information message. I believe we are very close to the end of the session. I don't think there is any time to address any more questions, given that we have less than 1 minute left. I would like to really thank you all for coming this morning and discussing this important question. Thank you.
Thank you. Thank you.
Thank you very much.
Thank you.
Thank you. Bye-bye now.
Bye-bye.